Good morning and welcome to the market prep, my fellow traders, friends, family, and futures people. It's good to be with you this Friday, September the 1st. My name is John Hoagland. Thanks for trusting me with your time all these years. And as always, we're going to be focusing on seeking accurate context, good risk management, and remaining patient in our trading. So as you've been kind of seeing, we haven't been doing the prep. We've been doing other stuff here and working on getting everything ready for continuing to move forward as a company and to bring an excellent trading experience to everyone. We have not been doing the market prep. We did the prep yesterday, and we are doing the last one today. It's been a wonderful 6 or 7 years that I've had the opportunity to spend the time with you guys, but it's not over. We're expanding on basically the market prep. We're going to be doing some live trading. Top Step TV is scheduled to soft open on Tuesday, next Tuesday, after Labor Day. You're going to see a lot more people, a lot more trading, a lot more information, and a lot more cool stuff. So we're really looking forward to providing all of that for you. As far as the economic numbers this morning, a lot for traders to unpack. You see the equities knee-jerk strongly in both directions, very illiquid, very tough to trade. If you were trading it, hopefully you got things right and made some money on that. But I'm going to be a little bit more, I guess, one of my words, digestive with the whole thing. So the unemployment rate was 3.5%, was expected to remain at 3.5%. Came out at 3.8%, a little bit higher as far as the unemployment rate is concerned. Now, the question is the Fed going to like this? Well, apparently that's what they've been trying to do. They've been trying to slow employment, slow pricing, slow all that stuff. So there's a little bit deeper information in this. Now, the non-farm payrolls last month, I should say, came out at 187. That has been revised to 157. They were looking for 170,000 new jobs, non-farm payroll. This time it came out 187. So the rate is higher. We did create more jobs, but the revision from last month changes that a little bit. There was a revision in private non-farm payrolls as well. Last month, they announced it at 172,000. They've revised that to 155,000. They were looking for 150,000 new private non-farm payroll jobs, and it came out also higher at 179,000. The participation rate actually is higher, even though the unemployment rate is higher. The participation rate was expected to remain at 62.6, came out a little bit higher at 62.8%. So that whole bowl of spaghetti there's a lot of contrary information. There's good news, there's bad news. It's all in how the markets are going to respond to it. And we're going to be trading what we see. It's all about the context, right? Don't forget at 8:45 this morning, one of the talking Feds, Meester, is going to be speaking. At 9 o'clock, the ISM manufacturing index due out, as well as construction spending. And that's going to do it for the week. We've got U.S. equity futures looking to start September in a positive way after a losing month in August. The September contracts for our equities are heading into rollover, something we'll be mentioning on Top Step TV and the opening call and fast market, and all of those. We'll be discussing what that means, what to look for, and how to move into the next contract. The next FOMC meeting is scheduled for September 19th and 20th. The next one after that, Halloween. Should be a scary October. Crude prices prepare to crush a 2-week losing streak as the U.S. inventory dropped, as we were notified by the API and the EIA this week. Now we were also getting news that Russia is dealing with OPEC Plus for more production cuts, further tightening supply. That's not good news for the Labor Day driving season that we've got upon us here. Interesting thing, pot stocks, if you own any of those, Fed is pondering loosening marijuana restrictions. I'm getting the munchies already. Somebody pass me the chips. Maybe we should buy some Frito-Lay if that's the case. As always, just taking a quick look at the VIX. You can get that written down. 1324, slightly lower, about 2.5% this morning as the markets continue to look to the upside. Dollar index 103.63, off its 104 venture earlier in the month, just coming off a little bit here this morning. And the yield on the 10-year, 4.095%, still just hanging on above 4.0. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. And I look forward to having you joining our YouTube channel so you can join Top Step TV starting next Tuesday. And another thing, we've got group coaching starting again next Wednesday. There is a new link you'll have to join up. It's now in the link right there. In the chat right there for you. Just click on that, register, and I look forward to seeing any and all of you in that group coaching session. Again, that's next Wednesday. And then from that point forward, it's every Monday and Wednesday at 12:30 Central. And again, looking forward to seeing everybody there. As always, it's great to see everyone. It's been a great 6 or 7 years we've been doing this. It's come a long way. I think we've, as traders, have come a long way by having the time to spend together and seeing what's going on in these markets and focusing on that context. Theo, it's great to see you this morning. Thank you for popping in. Dan, Bill, Tachyon, Sarah Hall, prayers and love to you. Nastic, glad to be back with you as well. Orion, yeah, we've kind of suspended the Market Prep for a little while, and now we are going to be expanding the Market Prep. It's now Top Step TV, opening call, fast markets, lots of guests, lots of information, lots of people. You're going to have, I think, a really good time keeping track of the markets and hanging out with us. Trading is a lonely business. We're trying to make it not so lonely. Haggle Matters, great to see you. Stephen, Michael, John, good to see you. Right, yes, we are going to be doing a version kind of what we do here on the Market Prep. We maybe simpling things down a little bit at the beginning, but I do intend on increasing the amount of information that we're going to be providing on the opening call, and maybe even kind of creating some master classes for those of you that are still interested in the market profile and continuing to learn more about markets. I've been at this for a long time, and I still learn something every day. And doing these market preps, doing the coachings, doing all of this, I think it has helped me as a trader immensely, and I'm hoping that it's helped you. I've never considered myself or will consider myself to be an influencer, but I just love trading, love talking to people, and love helping. So that's what I'm going to continue to try and do. Steve and Michael, Andy, good to see you. Grounds Hero, good to see you. Finding Fair Trades, good to see you. Colby and Nisa, great to be back. It's great to see you here. The Undercover Leprechaun, good morning to you. Kevin, good morning. Jimmy, good morning. Fred Decker, Fred, next weekend, not this weekend, but the weekend after, it's Bears-Packers, first regular season game. So we'll be looking forward to talking smack about that, won't we, Fred? Rue, good to see you. Rob T, Robert Harrison, Scott Saw, and he conquered. Keep conquering, Scott Saw. Robert, good morning. Bear goes long. James, good to see everybody. I got lost here. Where am I? Okay. Finding Fair Trades, John, good morning. Lacey says good morning to everybody as well. The center of the universe is currently laying on my feet as we speak. So, Kevin, you have the knowledge. You have the letters at the end of your name. You are a master chartist. Jay likes the market profile. Can't wait to learn more about it. Well, we will be, listening to your feedback is always and will always be extremely important to us here at Top Step. As we, get into Top Step TV, if there's things you like, if things you want to see, things you want us to add, make sure you let us know. You can email me, you can email support. Just let us know what you're looking for, and we're just getting started out on this. It's a pretty big venture, a lot of production, a lot of people involved. It's going to be really cool. And again, we're looking to fill a void, and that void is, man, trading can be a lonely business, and there's a lot of people to watch. We're hoping you're going to enjoy what we're going to be offering as well. So, all right, Dan, yes. I'm sorry to see the prep go as well, but we're going to look forward to Top Step TV, and there's going to be a lot more to it, a lot more time, a lot more information. And again, we need you guys to tell us what you're looking for. We're looking forward to being as Eddie says, your trading buddy. So you're going to get to see Eddie, and it's going to be a lot of fun. So, yeah, I agree with you, Fred. I think Top Step TV is going to be a great new chapter. One thing I've never really tried to do here is to be perfect, and I don't think we have to be perfect. There is no perfect in futures trading. I'm sure we're all well aware of that. So we're going to have a lot of fun together, and looking very much forward to it. So. Make sure, again, you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Subscribe to our YouTube channel so you get notifications when we do go live for Top Step TV. And on that note, why don't we jump into the charts? Well, I don't know about jumping. I could slip quietly into the charts, maybe, as that's more like it at my age. So here we go. E-mini S&Ps. Bad month, down month, but it seems to be finishing relatively strong and off to a good start this month. Volume maintained yesterday in futures. However, there was a pretty decent jump in volume at the New York Stock Exchange. We actually made 4 billion shares traded yesterday. We haven't done that in a while. So the thing that is a little bit iffy in a continuation to this up move is we lost open interest yesterday, but we had a down day. Open interest was lower. Some maybe profit taking before coming into this Friday unemployment number, right? The one thing that you're going to notice about this on the 30, we talked about this yesterday. There was a question about value and how important is value versus direction. Well, if you notice yesterday, we lost. It was a down day. We had a negative, move. We closed lower than we did the day before, but value is higher. Couple of other things here. We seeing rejection of yesterday's lows. Did we put in a late spike to the downside? There was an attempt at a late spike to the downside, but that did fail. Now look at where we are. We've got overnight inventory to the long side. We've probably wiped out most of the short time frame traders who were holding positions into the 730 numbers this morning. The knee jerk to the upside, the knee jerk to the downside. It's still really kind of digesting the information. And it looks right now, if we were to open, we'd be opening with a gap. So, all right, hang on a second here. We'd be opening with a gap. So that's a little bit of information. That's a nuance, right? The fact that we attempted a late spike, but that was not finished yesterday is also information. So with value moving higher, the open interest losing on a down day yesterday, the losses in open interest yesterday were probably longs liquidating. When longs liquidate, they take their selling power away from the marketplace. So we've got a lot of overnight longs here. We're going to be opening with a gap that gives us the opportunity to use this gap. If we can't close the gap relatively early, the market could very feasibly continue this move to the upside. It all depends on what investors and traders take of that information, which is like I said, it's like a spaghetti bowl of information. There's positive, there's goods, there's up, there's down, I'm not quite sure how to digest this information just yet. It's going to take a little bit of time for me and other traders to do so. Take a look at the TPO chart. So there's our attempted late spike. Okay, but settlement was 45.16. We did not succeed in closing in the late spike. It looks like it did here, but the settlement price, which is where the exchange marks the market for margins, did not happen. Even if it did happen, we're opening well above that level. That's saying that's rejection of lower pricing and potential acceptance of higher pricing. You can see here as well, value moved higher. We've got a normal variation trading day. To me, a normal variation trading day, which is a neutral in stature, says the market has used up a lot of its ability to facilitate trade here and is going to start seeking new levels to facilitate trade. We open with a gap. We can't close the gap. That says something. We open with a gap. We come back inside value. That says something else. Value area special situation play could come into play. What is that? Well, when we open outside of the previous day's range and value, and at some point in today's session, we mark acceptance inside value from yesterday, there's a good probability that price will eventually rotate to the low end of yesterday's balance area at some point in this session. Okay, so we had a normal variation extreme, normal variation neutral. I'm looking for this market to either continue a move higher, come back and accept value, and perhaps even pull back even further. When we look at what the market did this week, Monday, Tuesday, Wednesday, Thursday, it's been pretty much up all week. If we do run into some profit taking, it's something to be aware of. But the S&Ps, the equities, for the last 40 years have eaten shorts. In other words, if you think we're going to put in a top here and a whole lot of traders take shorts up here, the market has a tendency to just run them over. So, I think a lot of it is going to be if we open with a gap. If we open in range and value, I'll be patient and look for better trade locations as the day goes on. We've got a lot of digestion from those numbers. Like I said, it's a spaghetti bowl. Not quite sure what to make of it here just yet. Take a look now at the NASDAQ. The NASDAQ, again, starting off on a positive day here, first day of September. We, let's see here. We had our first close above weekly kickoff high on Wednesday. We traded up to it. We kind of centered on it yesterday. We've got a bit of a doji kind of candlestick here. It's not very decisive, but we did add 4,400 in open interest. We actually closed the NASDAQ higher on the day and above an important inflection level. I've got it written down here that the NASDAQ eked out a higher close, but volume wasn't all of that tremendous. It just kind of maintained. But the fact that we added open interest indicates that there was still some new buying interest in this market. Now those buyers are looking to get paid. Here's the 30-minute chart. All right, so there's weekly kickoff high, up to it, above it, looked back down below it, looked back down below it last night. It's been unable to maintain price below that. Looks like we're likely going to be opening with a gap, which is a nuance that I can use if we can't close the gap relatively early in the session. I understand that's a subjective term, but if we can't close the gap relatively early, then it looks like the market is accepting higher pricing, and I've got to look to buy weakness in that. The value area special situation play is looming, but that means price is going to have to open above the range It's going to have to come back in and accept inside of yesterday's value area, which is right here, value area high, approximately 15,584, 85, somewhere in there. And once it's accepted, then the probability states that the market will return to the low side of the value area from yesterday at some point during this session. The market is in short time frame. It is in an upside trend, and I don't want to fight that. I don't think that I'm smart enough to absolutely pick the all-time high here. So I'm going to try and stay patient, let the market come to me, tell me, okay, we haven't been able to close that gap. So maybe the market is accepting higher pricing, and I can look for opportunities on the long side. Here's the same situation in the NASDAQ as the S&Ps. A trend to the upside, weak high. A normal variation trading day with a weak high, extreme. Now yesterday, a normal variation day, neutral, looking for this market to seek new levels to facilitate trade. Right now, it is doing just that. It is seeking two-sided trade at higher pricing, marking possible acceptance of it. The gap is going to be crucial for us on the open. And we've got more excess on the lows, low excess highs, even excess yesterday. Market is going to probably go looking for new levels to participate. What about crude oil? So higher volume yesterday, yes. The upside auction seems to be gaining health at higher levels. We added 29,000 new contracts to the upside on a breakout above weekly kickoff high on higher volume. Higher volume, higher volume, higher volume. Volume is increasing as price is moving higher. The day before yesterday, we lost 14,000 in open interest, but yesterday they came in to buy this market. So I'm just going to be not fighting this upside move. When you look at this, 1, 2, 3, 4, 5, 6, 7 days with higher highs. 6 out of those days had higher lows. This market is one time framing higher in the day time frame. I'm not going to think that I'm going to be capable of just picking the top. Just picking the top. No. So a couple of notes. The August 22nd high in the current contract. So the August 2023 high back in August of 2022 was 85.03. Almost right where we are now. If you look at the October 2022 contract, which at the time was the front month, the August high was 97.66. Now that is the October 22 off the continuation chart. Do we have that kind of space above? Man, I hope not. I hope not. Let's look at the 30-minute. We've got a gap. We've got overnight inventory to the long side. There's been some reconciliation prior to the open here of the opening of the overnight inventory that was unable to close the gap. So the way this looks is I'm going to be looking to find opportunities for longs on weaknesses unless we've come back, close the gap, and start to accept inside the range from yesterday. I don't want to fight a directional move. And on the daily chart, this is a one-time framing, longer time frame move. And then seeing volume increasing and open interest increase on a close above an important inflection level. Don't fight it. Don't fight it. Now, oops. What else do we have here? Here's the profile from yesterday. Normal variation trading day with a late spike. Those of you that know the late spike rules, if we open in or above a late spike, the market is telling us it's accepting higher pricing. Well, we've just opened with a gap above a late spike. This could end up being almost an acceleration move. But that doesn't mean that price has to just continue to move higher right now. It could come all the way back down to the base of the late spike, which is right here, 83.30, and still be telling us that it's accepting of higher pricing. So the late spike is when price extends during the regular trading hour session and doesn't have time to accept price at those levels. Sometimes you'll get a breakout in the middle of the day that fails and the market rotates the other way. This market extended the range at the end of the day, closed there, and didn't have enough time to mark acceptance. So we look to where the regular trading hour session opens the following day, where we open in their late spike. It's kind of a secondary acceptance of higher pricing. Opening flat out above it is a higher probability of acceptance of higher pricing. Do have to remember there is the potential for profit taking. In shorter time frame, what did we do all week? We rallied. So if I'm holding longs down here and I'm coming up here, I'm thinking, man, maybe, just maybe, I should take some of that money off the table, especially coming into a long holiday weekend. Something else to think about. What about gold? Okay. Yesterday, we've been wrestling now for 2 straight days with this weekly kickoff high, 1970. It's a hell of a year. Good year for music, too. But it's been very difficult to trade in and around this weekly kickoff level. Sometimes they do become a little bit magnetic. We're going to be aware of those things. So it's continuing to wrestle, maybe not now. Yesterday, we lost 4,300 in open interest on an inside day. The market took the rest, took a look around, said, hey, do we look like we want to go higher? What are we doing here? Take a look at the 30. So we had one close above weekly kickoff high, 1970. Yesterday we opened, we traded back down below it. We closed back down below it. Market really just kind of centering the ranges for the last 2 days right at weekly kickoff high. Now we've got new information, knee jerk to the upside. Our knee jerks actually took us right to our weekly kickoff level and rejected those levels. So we did not open with a gap, but the upside move is kind of indicating to me that there is a tendency to move a little bit higher here. It's going to be a tough day. I'm not convinced that this market is ready to continue to move higher. We've been seeing the dollar coming off for about a week now. It's still closing on an up month yesterday, but on a down week. Take a look at the TPO chart. What do we notice about yesterday? We have a poor low, no excess low. We've had excess, no excess low, or a low excess low here. Excess down here. So the one thing that keeps me awake at night if I'm long gold is the fact that the market did take that one little step to extend the range lower, and it did not complete the downside auction. When's that going to be important? Well, when it's important. We got the low here at weekly kickoff low and showing signs of rejection in excess in the daytime frame here. Value moving higher, continuing to move higher over time. Oh, why isn't it just one of these days that I can say, here's what's going to happen, here's where you buy it, here's where you sell it, but nobody can do that. It's all in the context. It's all in your ability to kind of take what you know about markets, interface it with what you know about yourself, and then look for the good opportunities. So it's been 7 years, I think, since we started this market prep. We started with just an iPhone drawing charts on a whiteboard. It's been quite an iteration. It has been quite a ride. I have enjoyed every minute of having the opportunity to talk to you guys and to work with you guys. And I hope that I've made a positive difference. If I've made a positive difference for even just a few of you, that to me has been worth everything. And you know, it's trading is hard, man. It is hard. I have been to the golden ring, and I have been to the depths of despair in my 31 years as an active trader. And you know, it's a passion, and that passion, at least for me, and I'm hoping for all of you, isn't about the process of trading, of just taking trades, seeing the P&L move up and down. You know, it is about making money, but to me, it's more than that. It's a continual maturation process, I think, where, you know, I started out knowing very little about markets and profile and all that stuff, and I've been learning every day ever since. And there is no destination. There's no period or specific time when you're going to get that light bulb over your head and you're going to say, aha, I get it now. Because the minute you do that, you let your guard down, you lose your humility. Once you have the right answers, the market's going to change the questions, and there's a whole new learning process that has to take place. So there's no destination to trading until you liquidate that last trade that you're ever going to take. I think I'm a long way from that. I'm hoping that, you know, all of you are going to have long, successful, and gratifying careers here, and you know, there's something we all hope for at Top Step is your success, and we are doing more and more every day to try and help you ensure that success. Nobody can do this for you. It is so personal and lonely, and you know, it helps to have some people around sometimes just to talk, just to help you kind of get into your own mind, and to remind you that, you know, what you're about to do may not be in your best interests. One of the things we all have to remember is you have to be doing things in your best interest. If you're about to do something, we all have impulses. I mean, there's still things that I think about doing that I've done 1,000 times before, and 1,000 times before they've never worked. And those are the impulses. And I've, you know, you learn to say to yourself, all right, I'm having this impulse to do this, and I know it's wrong. I got to remember this is not in my best interest. And some of those things are, you know, might actually end up being winning trades, and that's even worse because you just you know, ingrain bad behavior when you do something that's out of your strategy or out of your process, and it ends up paying you. You know, it's detrimental to have bad behavior get paid in trading and in life, really. So anyways, I'm going to stop yammering. Let's take our deep breath. One last time, stay humble, grateful, creative, and centered in your trading today, tomorrow, and every day. It is Labor Day weekend. No information due out on Monday. Limited trading hours, very limited volume. Take the day off. Come back on Tuesday. We'll see you on Tuesday with Top Step TV. Again, thank you all for trusting me with your time. Thank you for the time. Thank you for keeping me accountable. One of the things that I love about this is I'm not presenting this every day unless I've done my homework. And then when I do my homework, that means I get to play. If you don't do your homework, you don't get to play. So do your homework. We'll see you next week. Blessings to you all. I love you all. I'm looking forward to your success. Now, just get out there, stay in process, and profit. Have a great day.